following is an update and technical analysis on PEPE Coin, a meme coin of the cryptocurrency markets here off the 240-minute info where I mentioned on the 8th of August 2023 we're trading spot price 0.0118 there off this nice clean bullish falling wedge pattern with a nice clean divergent low. We had additionally near-term divergent low with positive and or bullish divergences really constructed amongst all three technical momentum indicators. And really what had happened was we broke down, ended up backtesting this 0 fibs retracement level, consolidated and retraced the entire move to the upside and completely broke out of that bullish falling wedge pattern, backtesting the 122 price resistance. And then that was clean for a nice clean pullback retest, coinciding with the 50 to 40-minute moving average. Call it a dual line of support for a clean, objective, long trade entry. And here's the update. The entire trade thus far is good for, call it a 24.92, call it 25% in gains off that key inflection point, banging into the resistance for reactionary highs right off that key inflection point, especially if you're an active and or quick on your toe day trader down to the downside, retesting good for a minus 4.8% drop to the downside. And it is backtesting the 240-minute moving average, coinciding with the 136 price resistance, call that dual line of resistance. And that is pretty darn good support there. Whereas you could begin to raise your stops and have some guaranteed profit in that, off that key inflection point, maybe set some stops below here. I could personally see dip buyers even buying off that key inflection point where they had a whipsaw-like reaction, retrace the entire move, backtested amongst this key resistance, and we could have a further consolidation phase here on a clean breakout. Bulls want to see a complete breakout, retest of the 50% fibs retracement, called 147 price resistance, and that is pretty darn good resistance. Major inflection point as well, right off the top of that range where we just came shy of tapping on that key inflection point. So again, bull traders want to see a nice clean breakout above and then retest the 618 fibs retracement, call it 157 price resistance, and that is big resistance right off that key inflection point with just multiple reactionary highs, reactionary lows, really across the board there, and that would be a next geared in target of all key inflection points in my opinion. Or you could make the case for near-term negative divergence here, whereas you have the RSI divergence and a potential crossover on the moving average convergence as of now, especially if you took that short trade setup up towards the top of the range there, scaling in and scaling right back into that 382 fibs retracement, and then even better resistance again right off that 618 fibs retracement if you begin the scaling in short process for a big move to the downside, which would be extremely aggressive in my opinion. Whereas you have the stochastics oscillator divergence as well with the confirmed bearish crossover there. And again, just some key inflection points to watch. Bullish to take this key inflection point out, and it'll be extremely bearish if we take out this dual line of support and make a prolonged retest of that 131 price support there down below, coinciding with the 50 to 40-minute moving average. So these are your main inflection points to watch, and they have been reacted just with velocity and pinpoint accuracy on all key metrics of these pivotal price support and resistance zones.